International trade settlement in Indian rupees. Today we are going to decode an important and emerging topic in India's trade and foreign exchange framework, international trade settlement in Indian rupees, updated as on August 5th, 2025. This arrangement, introduced by the Reserve Bank of India, is a major step towards internationalizing the Indian rupee and reducing dependence on hard currencies like US dollars or euro. So in this video, we will cover what is the Special Rupee Vostro Account SRVA, how is this mechanism works, and RBI guidelines and FEMA provisions, and benefits for Indian traders, and key FAQ answered in a simple language. So let's get started. We'll first understand Special Rupee Vostro Account SRVA. A Vostro account is an account that a foreign bank holds with a domestic bank in the domestic bank's currency. A Vostro account is an account that a foreign bank holds with a domestic bank in the domestic bank's currency. Under the Foreign Exchange Management Deposit Rules Regulations 2016, Foreign Exchange Management Deposit Regulation 2016, foreign banks could already open Rupee Vostro accounts, but now the Special Rupee Vostro Account, that is SRVA, is introduced as an additional mechanism. It is an additional mechanism to settle international trade directly in INR, instead of freely convertible currencies like US dollar. So SRVA is not a replacement of the old system, but an extra option aimed at promoting the use of Indian rupees in a global trade. So what is the new in this agreement? Traditionally, international trade settlements relied on freely convertible currencies. That is a tradition. Now with this SRVA framework, we can settle trade in Indian rupees, so reducing the need for hard currencies. This is complementary to the existing system, meaning both can coexist. So how it works? Bank-to-bank agreement. This is primarily a bank-to-bank agreement, similar to correspondent banking. What is correspondent banking? It means one bank acts as an agent for another for facilitating wire transfers, business transactions, accepting deposits, document handling. So domestic banks use this access foreign markets without opening branches abroad. Here, AD, Indian Authorized Dealer. Indian Authorized Dealer banks can open SRVA for foreign banks from partner countries, subject to RBI approval. So the key operational guidelines are: first, eligibility. Even the Indian branch of foreign bank can open SRVA for its head office or another foreign branch, provided it is an AD bank and has RBI approval. This is the eligibility. Existing Rupee Vostro accounts cannot be automatically converted into SRVS. Fresh opening is required. Regarding multiple accounts, a foreign bank can maintain SRVS with multiple AD banks in India. A foreign bank can maintain SRVS with multiple AD banks in India. An Indian AD bank can open multiple SRVS for different banks from the same country. And exchange rate determination. Exchange rates between two Indian partner currencies. Exchange rates between two trading partner currencies will be market determined. If there is no direct currency quote, example like INR and Sri Lanka rupee, the rate will be calculated via cross-currency trade, via cross-currency rate using global currencies. And then scope and objective. This is not targeted at any particular country. It is a strategic move to increase the use of INR in global trade. This is the objective. It reduces Forex volatility, and build resilience in cross-border payments. And repatriation rules, balances in SRVA can be repatriated in freely convertible currency or in domestic currency of the overseas exporter, depending on the underlying transaction. Example, if an Indian importer buys goods from a Russian exporter, the payment credited to the SRVA can be remitted to the exporter either in USD or in Russian ruble. Use of SRVA balances. So the balance can be used for any permissible current or capital account transaction under FEMA. Any permissible current or capital account transaction under FEMA, including FDI and ECB. FDI is foreign direct investment, ECB external commercial borrowings. And surplus balances. Surplus balances can be invested in government treasury bills, can be government securities, can be invested in other agreed revenues, subject to regulatory compliances. And hedging and investments. INR balances in SRVA can be hedged to manage currency risk. Investment in T-bills and G-checks from SRVA funds does not require an FPI license for the overseas bank. And reporting responsibilities, the Indian AD Bank operating the SRVA is responsible for reporting all transactions in that account, not the foreign bank. And benefits to Indian traders. Settling the trade in INR eliminates the exchange rate risk for Indian exporters and importers. Reduces dependency on US dollar and EUR or other hard currencies. It reduces the dependency and promotes wider acceptance of INR in international markets. These are all the benefits. And public information, details of SRVA opened by Indian banks are available on FEDI's website under the SRVA directory section. So the conclusion is the international trade settlement in INR through Special Rupee Vostro Account is a landmark initiative that not only benefits Indian business but also strengthens India's financial independence on the global stage. So it is a step towards making the Indian rupee more globally acceptable, reducing transaction cost, and insulating our trade from external currency shocks. Now we'll move on to websites. You can see here if you go to Reserve Bank of India website, go to FAQ section. There you can find the FAQ on international trade settlement in Indian rupees. This is dated 5th August 2025. This is what we discussed. You can go through the FAQ on Reserve Bank of India websites under FAQ international trade settlement in Indian rupees INR. We have two channels, RR Corporate and RR Legal Talks. RR Corporates and RR Legal Talks. Please do subscribe and hit the bell icon so that you will not miss any of the latest updates. Thank you.